The gap between the proposals accounts for about $700 billion in government revenues over a decade, according to the Tax Foundation. Slashing the rate too far could bind the hands of tax writers as they seek to lower the tax bills of middle-class Americans. Revenues from corporate taxes have fallen in recent years, even as America's businesses have become more profitable. According to the Tax Policy Center, the tax on corporate profits are estimated to represent just 2.2% of gross domestic product this year. The tension over business taxes was on display on Sunday when Trump addressed corporate taxes, while in New Jersey. It was clear he was still trying to make his case for a lower rate. "We'll see what happens, but I hope it's going to be 15%, Trump said. The framework is expected to closely resemble the Better Way blueprint that House Republicans released in 2016. That plan also lowered tax rates for individuals, consolidated individual income tax brackets, and nearly doubled the standard deduction. The new plan will not include the contentious tax on imports that was championed by Mr. Brady and Speaker Paul D. Ryan, but jettisoned by Republicans in July. Deliberations are also continuing over a reduction to the top individual tax rate. A White House official said that Trump had not yet signed off on a proposal to lower the rate to 35% from 39.6%. Trump has said that the rich will not see their tax bill shrink. The Republican plan is expected to call for creating a 25% tax for pass-through businesses. Pass-throughs, which currently can include small businesses, farms, and other types of partnerships, account for a vast majority of business income, and their profits are taxed at individual income rates. The framework is also expected to propose a shift to a territorial tax system, in which overseas earnings of American companies are not taxed in the United States. However, sorting out such a shift and potential measures to prevent erosion of the tax base, like a controversial global minimum tax, are likely to be left to Congress. Brady would not reveal how much, if any, detail on paying for the plan would be made public this week. Under Senate rules, if the legislation adds to the deficit after a period of 10 years, some of the tax cuts could expire. "We continue to be focused on permanency, or as much of it as we can achieve," he said. The framework is expected to be a starting point in a race to get a tax bill passed by the end of the year. Brady said that more detailed legislative language would be produced after Congress passes a budget resolution that includes a tool known as reconciliation instructions, allowing a tax bill to pass the Senate with a simple majority. Republican leaders maintain that it is possible to swiftly pass the tax overhaul. But the hard part is about to begin. Legions of lobbyists who have spent their careers quietly roving around Washington, pushing to preserve beneficial tax structures, are ready to pounce. The business community has been preparing for this moment for years, said Ken Spain, a tax lobbyist at the public affairs firm CGCN Group. The biggest fight could come from the housing industry. Realtors and home builders are bracing for a doubling of the standard deduction for individuals, which they contend could reduce incentives to buy houses, like the mortgage interest deduction, potentially leading to another housing market downturn. We'll start getting the grassroots involved, start doing public education, and the conversation will quickly elevate. Jamie Gregory, a lobbyist at the National Association of Realtors, said of tax changes that could hurt the real estate business. Retailers are closely watching the haggling between Trump and Congress over lowering the corporate tax rate. They hope Mr. Trump wins. The border adjustment tax was always a distraction from our No.1 goal, which was to get to tax reform, and especially to get to the lowest possible corporate tax rate, said David French of the National Retail Federation.